Hello everyone. It's been a while since I've been a long format video. We've been seeing some difficult market conditions with manipulation, lots of Judas swings, false moves, and an unusual amount of volatility following the geopolitical events that have been taking place in the world. In a time like this, it's especially important to know when you should be avoiding setups. I wanted to come in and talk about some things that you can focus on to take higher quality setups and increase your win rate as a consequence of that. The biggest reason that I've found for myself initially and for most traders who can't seem to find consistency is that they're rushing setups or over trading and they're participating too much in the marketplace. Everything that they see, they're trying to make money off of every move. They're trying to find an opportunity in. And that is not the right mindset to have, especially when you're first starting out or if you're having a difficult time finding consistency. What I found that helped me was to limit my engagement by defining a very strict time window to execute in. For example, in my model, the way I trade, right now I only execute and enter trades within the 20-minute ICT macro window. So what this looks like in the New York AM session is from 9:50 to 10:10. So in this block of time right here between these two vertical lines, that's when I look for an entry mechanism if a setup presents itself. So the first 20 minutes, I'm just looking at what price is doing, if it is offering a setup that aligns with my model, and if I anticipate something forming, then I'll look for an entry in this time window. And whenever price leaves this time window, I just watch from the sidelines and observe and tape read. I don't engage. That's what works for me right now. That's how I'm able to remain solvent and minimize my engagement with the marketplace right now. Do I miss setups? Absolutely. There are runs that take place outside of the macro. In this very example that I'm going to be going over, you'll see that as well. But because of this, I can be highly selective. I've learned to not only eliminate a lot of bad decisions that I used to make initially when I first started, but over time I've learned to become more and more accurate in determining if a setup is in fact high probability for me. It's helped me become more patient, more disciplined, and it helps me stay consistent, especially in difficult market conditions like we're seeing right now. And this is something that might not resonate with you. That's fine. This might be too strict of a time window for you to engage with. You could change that up to what fits for you. If you like trading in the first 30 minutes of the market opening, you can limit yourself to engaging during the opening range, which is from 9:30 to 10 o'clock. If you like trading the silver bullet, which is from 10 a.m. to 11 a.m. for the New York AM silver bullet that ICT teaches, that gives you a 1 hour window to execute upon, and you can align different confluences to only trade within that time window. But if you're struggling with overtrading, taking low probability setups, and you know that you're forcing engagement when you shouldn't be, then this is something that can really help you. Find yourself a time window that works for you and limit your engagement only within that time window. All right, just to illustrate, I'm going to go over the model that I trade with as an example to help give a better understanding. I'll write this down so you can follow. I trade a reversal model. I anticipate a run on overnight liquidity as a manipulation. So essentially a Judas swing that takes place in the first 20 minutes of New York Open, sweeping overnight liquidity, pre-session, London, Asia, previous day high, etc. Anticipating a run on opposing liquidity. Additionally, I use the midnight open price, so let me annotate that. And I use the regular trading hours opening range gap. So I'm going to toggle regular trading hours. So you can see here, previous day's regular trading hour close and Thursday's 9:30 open. That gap is the regular trading hours opening range gap. And I'm going to annotate that with the fib here, just so you can get an idea. So this is the low, this is the high, and I have it broken into quadrants. This is the lower quadrant, consequent encroachment or equilibrium, upper quadrant, and the high. And this is the midnight open. Gonna go back to the electronic trading hours again. So in addition to this, I've also got the new day opening gap from Thursday annotated here. We'll go to that in a second. ICT teaches the best longs form below the midnight open and the best shorts form above midnight open, because that is a price that the algorithm uses to form the daily profile. So with that in mind, I use that in my model as well. So we'll keep that in mind as I go into explaining Thursday's trade as an example. All right, next we have the new day opening gap from Thursday. This is one of the higher time frame key levels that I like to have annotated and refer to. All right, so now let's get into the trade that I took on Thursday. As an example, I had a bullish bias coming into Thursday. We're at all-time highs, and I wanted to see price manipulate in the first 20 minutes of the New York Open. As you can see here, overnight in the pre-session in London, price had a ton of sell-side liquidity as it was creating higher highs and higher lows. At 9:30 open, price broke lower here and swept all the pre-session liquidities resting below these equal lows, as well as this London low here. As price swept the annotated sell side here in red, going into the 950 1010 macro window, I wanted to see this new day opening gap from Thursday being used as support as the higher time frame key level to frame a reversal off of. That was the narrative that I was looking for. So this 957 candle, it fails to reach the high here and closes just above. That is an indication of strength to me. That's a signature in price action that indicates strength. 958 candle opens, wicks just below the high, and has a bullish reaction to it, furthermore indicating strength. Right? That's how ICT teaches to read order flow. To frame an entry, I was looking at this down close candle here as a bullish order block. When this 958 candle wicked above the opening price of that down close candle here, that validated this as a bullish order block. Now, in theory, all these down close candles here, the series of the down close candles, make up the bullish order block. However, this is the more prolonged, prominent candle, and that's what I wanted to use to frame an entry off of. This 10 o'clock candle, I used that to enter as it opened and wicked into the opening price of this down close candle, the change in state of delivery. I used that for my entry. I wanted to see these equal highs being swept. That was my target for the move. I had this inversion fair value gap annotated, and in the execution, I'm typing out here that I want to see speed through the consequent encroachment. So this candle, the 1002 candle, wicks into the consequent encroachment, closes in the lower half. Next candle opens, tries to get into the upper half again, but showing premium sensitivity, closes in the lower half once again. Next candle opens, wicks into the consequent encroachment right there, and breaks lower, and closes just below the low of the inversion fair value gap. Seeing all this, that to me indicates weakness. I don't want to see that. I wanted to see speed through the consequent encroachment, getting into the upper half, closing above the inversion fair value gap, and then using the high as support to move higher and sweep the buy side. So at this point, I was moving my stop to break even because I didn't want to see this. I didn't want to see price come down below this inefficiency here. All right, and then when this candle opened, wicked into the consequent encroachment once again to the tick, as you can see here, it immediately broke lower and closed here below this inefficiency. And then I ended up getting stopped out at break even on this 1008 candle. The point that I want to make with this video is once you have gained enough understanding of the concepts and have gained a technical understanding and found something that you resonate with in price action, something that aligns with your personality, when you have a framework for a model, then what you want to do is start journaling. That's when the biggest shift for me came. When I started journaling seriously, I stopped only tracking whether I won or lost. I started tracking the conditions around each trade. How much sleep did I get? How was I feeling emotionally? What was going on in my personal life? When you're first starting out, you're going to feel a lot of emotions and adrenaline when you're participating in the marketplace. And based on your personality, you're going to be too excited or too frightened to press the button. I was very impulsive when I first started, and everything I saw in price action, I just thought it was an opportunity to participate. And I learned very quickly that that's not how it works. So the first thing I did was, okay, how can I frame a specific window of time only to execute in? Well, ICT teaches the macro windows where the algorithm will seek an inefficiency or liquidity within that window. That's perfect. I will only execute in that time window. Next, okay, I'm trading in the New York AM session. I'm using the regular trading hours opening range gap. In relation to that gap, where am I entering? Am I entering in the premium or discount? How does this affect when I go long or short, respectively? Where is the midnight open? Where is the 8:30 open in relation to my entries? How does the behavior of price overnight through Asia, London, and pre-session affect my probabilities in my setups in the New York AM session? Is there a pattern where high probability reversals are forming based on what happens overnight? And I found, yeah, there was a pattern. If price has a one directional run overnight and is far away from the midnight open, or has a large regular trading hours opening range gap, the probabilities of a reversal in the AM session are reduced. With a large gap, price is more likely to only return to the upper or lower quadrant based on if it gaps up or down. Those environments are better suitable for continuations. So I can either frame a model for a continuation setup, or I can simply just tape read and observe from the sidelines. I started observing where the lower timeframe PD arrays that I was using as entry mechanisms formed. And ICT teaches, okay, well, if you align them with your higher timeframe PD arrays, key levels, this order block lying over the lower quadrant of the regular trading hours opening range gap. Lower timeframe PD array overlaying higher timeframe key level. Simple as that. And that helped me narrow my focus even further. And by doing so, over months, I gathered a lot of data and was able to answer all the questions that I had, all the frustration, and provide a resolution to everything that I needed in my journal. Everyone looks for the perfect video to help everything click for them. Everyone is looking for the right mentorship, the perfect model to find the answer. And the truth is, there's no one else that can help you find the specific answers that you're looking for. Yes, absolutely. You can learn from others. You can learn the concepts. You can learn trading psychology from others. Everything I've learned is from ICT. And if it wasn't for his teachings, I wouldn't be here. But the only way I was able to find consistency was through journaling. And that's the same thing that he says. Tape read, practice on demo, observe and gather data through journaling, and you'll be able to find patterns that best align in your winning trades, in your losing setups, and in your behavior. You'll not only find consistency in the charts, but you'll develop into a better human being and become a better version of yourself outside of the charts. It's going to take hard work. It's going to take a lot of dedication, but I promise you, it's going to be extremely rewarding for you in the long run. If this was useful for you, and if you learned something, please leave a like and a comment below. Thank you guys for watching, and I'll see you next time.